Well, hello, guys. Happy Friday. Thank you for tuning in. It's DannyDealz coming at you with another episode of Un Poco Mas, the show where we give you just a little bit more on behalf of Hurricane Lopez and Stock. Karen, we would like to welcome you. It is well after the market. It's even after the aftermarket, guys. I am from the school they tore down to build the old school. It is 7 p.m. out here on the Pacific Coast in beautiful sunny Los Angeles. It's just after 10 o'clock out in NYC. Hope it's a beautiful day or night wherever you find yourselves. Hope you guys had a great week. The SOFI stock finally made the big move we all thought it should have made many, many times over. But as you know, the stock was crushed after earnings in a desperate, pathetic, horrible short attack, and the stock has rebounded quite nicely. Guys, want to just go over the week that we had. You can obviously see on the weekly chart, we started around $5.39 and then jumped up to open on Tuesday at 568, and we have just seen quite a bit of buying pressure in the stock ever since. And a lot of people think that the short sellers have given up, and that's why we're seeing the price go up, because no institutions or sane people would buy into SoFi. But in fact, that is actually not true. Shorts were working hard all week. Some days they did return a few more shares than they borrowed, but overall, in the last week, this 30% run, I don't think you could, just chalk up to short sellers covering, because, in fact, in the last 7 days, the short interest actually up 1.52%. And the percentage of the free float on loan is up 4%, almost 4%, as are the shares on loan. Um, and I actually saw cost to borrow max spike up to as high as 14.27% yesterday, which, as most of you know, if you follow the SoFi stock closely, is just absolutely unheard of. The cost to borrow is usually less than 1% because there's so many shares available. But I think there's a shift going on under the surface. A lot more buyers are coming into the stock, a lot of new money. I'm looking for filings soon, whether it be institutions, insider buys, but that is an awful lot of buying pressure to combat that short attack just from us scrappy retail investors. But guys, I want to tell you a fact you probably already knew, that SoFi is better than Apple. SoFi makes Apple look like a huge, huge turd. Everybody thinks this is easy. But just from like last month, Apple Pay goes down, leaving millions of customers without access to their money. That was May 2nd. But just from yesterday, and these articles were everywhere, Apple customers struggle to get money out of Goldman Sachs operated accounts. You guys remember the FUD machine, the turds, that when Apple announced they were going to do this savings account or whatever, everyone's like, oh, SoFi's dead. I think SoFi dropped, like Upstart dropped, all the new fintechs drop, because everybody's so afraid of Apple. Like, everybody's already has Apple putting Tesla out of business with a car they've been working on for a decade, and nobody's seen, nobody's heard about. And I frankly don't think this Apple Bank is anything to worry about, because it's not even operated by these guys. It's operated by the turds over at Goldman Sachs, the same geniuses that brought you Marcus. Oh, what a product. And they launched a high yield savings account. This is a New York Post, but again, these articles are everywhere. You just Google problems with Apple savings account or Apple Bank. Georgia resident Nathan Thacker told the Wall Street Journal he'd been trying to transfer $1,700 from his Apple account to JP Morgan Chase since May 15th. Each time he tried to contact Goldman's customer service, Thacker was told to give it a few days. The money finally hit his Chase account on Thursday, but only after the Journal contacted Goldman about Thacker and other customers' faulty experiences trying to transfer their money out of Apple's savings account. In some other money transfer related cases, the funds were seemingly disappeared. It didn't show up in Apple's account nor the account they were trying to transfer the money to. The credit card gives customers 3% back, something called daily cash, and that account is also serviced by Goldman Sachs, the Wall Street investment giant. Customers deposited $1 billion in the first 4 days, and that's what everyone was going absolutely wild about. But if you notice, they're taking that money out because this whole system and partnership they have with Goldman. It's a big turd. It's a big dinosaur. They should get on the bus and use Galileo, because this is where it's going to take time, guys, to show why it was a good decision to pay so much for Galileo and Technesis, because this is the backbone. This is the integrated stack. This is the AWS of fintech. This is the backbone that can run banks, credit cards, payment processing, loans using AI. It takes out risk. It's great with fraud prevention. When you talk about the products that SoFi can offer, that's one thing. But Galileo and Technesis, um, this is the future of digital banking, and this is the kind of technology stack that will eliminate these problems that Goldman and Apple are having. And everybody wants to pretend Apple is this absolutely perfect company. I mean, Apple makes a ton of money because they basically have a legal monopoly where they can bully all kinds of their customers and other people and other companies and app providers, and they basically have no choice but to play Apple's game because Apple has so much market share. But everybody who just thought, oh, SoFi's done, like SoFi can't compete with Apple, like somebody got up on stage in a button down shirt and started talking about cool things, and it's ridiculous, guys. This is not as easy as you think. This is not as easy as it seems. You don't just wake up one day and go, hey, we're going to dominate the banking space. It takes a lot of time. It takes a lot of work. Remember how hard it was just to get a banking charter. They aren't passing those things out, and Apple's not a real bank. They're just putting their name on a turd from Goldman Sachs. It's like, if you take a Marcus account and you put an Apple logo on it, it's still a smelly turd inside there. You might, you pay people a high enough rate, they're going to come over. And I know that's one of the things SoFi does, but it's not going to work if your execution isn't there and your product is a huge, huge stinking turd where customers can't get their money. And that's not getting your money right, folks. That's getting your money wrong. And Apple's getting people's money wrong. Goldman's getting people's money wrong. That's why their Marcus product is a huge failure. That's why I think they're a prime candidate to try to buy SoFi, but I just don't think they're willing to pay the price that their old employee Anthony Noto wants for the company. I suspect he wouldn't take anything less than $20 a share, and I know that's three times the current share price, but I feel that he thinks the company is absurdly undervalued at this point, which is why he buys these dips so hard. But anyway, guys, I'm off on a tangent. I'm at 7 business days and counting on money I withdrew from Apple Savings into another external savings account. Mind you, also was Goldman Sachs, another disgruntled customer replied. Yet another replied, adding, Apple Savings representative told me that if the withdrawals are not successful by the 6th or 7th business day, it will reverse and put the money back into your Apple Savings account. I'm hoping this is true and will wait another couple of days. Goldman didn't comment on specific customers, but instead blamed the suspicious activity on a delayed transfer due to processes in place designed to help protect their accounts. The bank added, it takes our obligation to protect our customers' deposits very seriously. The customer's response to the new savings account for Apple Card users has been excellent and beyond our expectations. A vast majority of customers see no delays. Guys, this is a big enough problem where there's major media reporting it all over the place. And where there's smoke, there's fire. There's no reason that to prevent fraud, anti-money laundering, that they can set off AML alarms and other security concerns that call for reviews, but talking about money laundering, I mean, the guy trying to transfer $1,700 and another guy trying to transfer money to another account with Goldman Sachs. I mean, I don't think this is money laundering. I think this is technical incompetence. Um, and I think Goldman's a dinosaur. I think they either need to adapt, or like many of these investment banks, they're going to die because a lot of their function has been eliminated by technology, and there's other players that are coming in and will do what they do for less money, less fees, just less bloated, less fat. These companies, like Goldman Sachs, they want to be, a retail banking product, a credit card product, but what people want in those products is customer service, convenience, good rates. They don't want some name on it that's used to be prestigious back in the 1980s when the Brat Pack was running around and everybody wanted a BMW 735i in dark gray, and that was the cool thing to do. And you'd go out, for drinks with your buddies, like Judge Reinhold, after work in the city. It was wonderful. But the point is, guys, Galileo and Technesis are an extremely underrated part of the SOFI equation. They paid a lot of money for those companies, and they hadn't done a ton of sales at that point. But remember, guys, Anthony Noto said we're talking to 12 major financial institutions right now, Galileo. So I know that doesn't mean they're going to sign contracts with all those customers, and I know those might not all be major banks, but I want you guys to think about the press this Apple thing got. And this is just a rebranded turd from Goldman. What if SoFi actually lands a couple of major banks or, semi major regional banks? I mean, Galileo is going to have revenues coming in for decades off of these people. They're going to be running the entire technology stack, they're going to be rolling out new products. These relationships, they're not going to pay, massive billions of dollars every single year from a customer. It's not going to be that kind of thing, but the margins are going to be there, and they're going to be ongoing, and they're going to be, very little additional cost, marginal cost to bring these new customers on board. And I firmly believe that the Galileo Technesis team is top of the top. And I know when they combined those two companies, they did lose some people, but I think they kept the key people. I think they've compensated them well, obviously, with, dilution in shares, much to our chagrin. But in any case, guys, this Apple faltering, all these things you read about, how people just can't stand the banks, the credit cards, the waiting on hold, the branches that aren't open, the branches they took away due to COVID. Um, they never want to open those branches again because they're very costly. They don't want to pay those huge leases. They don't want to pay the CAM. They don't want to pay all those people that sit in those offices, and they come up to you when you're online and you want to, all you're doing is waiting for a teller, and the manager comes up to you and goes, does anybody have a transaction that doesn't need cash? Anybody have a transaction that doesn't need to be a customer here? Anybody that have a transaction that you could just go ahead and do next door at Subway? Maybe get yourself a sub, use our ATM outside. I'll show you how to use the ATM. Like, of course you wouldn't be in here if you wanted to use the ATM, am I right? You just want a teller, and there's only one teller working. Like, three people are having a conference back there about what they're going to eat for lunch, and then there's six of us sitting in these offices over here where you open new accounts or do investments or insurance or whatever the hell we do over here, and we're whispering in these weird little cubicles, but there's nobody here because this place is dying. And not only that, it's killing our balance sheet because we have all these expenses, but we can't get rid of all these branches, all these people, all these pensions, all these costs, all these benefits. Oh, if only we were SoFi. We would be a lean, mean fighting machine prepared to do battle in the next century and beyond. I think SoFi could be a power player in the finance space for thousands and thousands of years. Guys, want to direct your attention over to this Brad Freeman. I was just introduced to him. I think by a video I saw on YouTube. Can't remember exactly where I saw it, but I would subscribe to this guy. His stack is called the Stock Market Nerd. Brad Freeman, May 27, 2023, just goes over. We published a defense of the SoFi bull case after Wedbush aggressively downgraded the name for reasons we disagreed with. Well, this week, CEO Anthony Noto sat down with JP Morgan for a conference. Most of the topics were covered and were identical to the explanation we provided. Pardon me. The strong deposit trend SoFi enjoyed in Q1 continued into May. CEO Anthony Noto reiterated plans to add at least $2 billion in deposits in this quarter. He was expecting just 35% of new accounts to utilize direct deposit, but 50% of its new accounts are doing so. That might not seem like a huge jump, guys, 35 to 50, but when you're talking about statistics and you're talking about customers and you're talking about something as critical as direct deposit, the fact that their expectation was just over a third of their customers doing direct deposit and it's actually half is absolutely epic, guys. I think that number, that distinction, that difference is a lot more important than many of us might realize at this point. But I think we will realize it soon as those deposits continue to grow and flee other banks. And Our customers, or SoFi's customers, I like to think of myself on Team SoFi, though I'm not a fanboy and a pumper. You guys know that. I'm objective and blah, blah, blah. Interestingly, these deposits are not coming from the Silicon Valley Bank debacle. They're coming from large money center banks. That's the point, guys. They're taking money from the major banks. You can track these things. Um, that points to this trend being durable and not a temporary reaction to a systemic shock. Guys, this is saying it. The statistics are saying it. They're not leaving because they're fearful of other banks going under. They're leaving because SoFi is better. SoFi offers them more. They're leaving the major banks. They're not leaving the banks that went out of business. Silicon Valley Bank mostly had, wealthy people, tech companies. These aren't your average people that are banking and borrowing from SoFi. That's ridiculous. They're leaving, Wells Fargo. They're leaving Bank of America. They're leaving regional banks. They're leaving credit unions. They want the technology. They want the convenience. Gimme. I need that SoFi. Give me that SoFi. Some of people in my live stream were commenting they wanted to hear me sing. Guys, I don't know if you want that. We'll talk about it. We'll negotiate that later with the terms of our new contract. Guys, personal loans. This is another key. Like, everybody's so worried about personal loans. SoFi continues to reject 70% of applicants and continues to tighten its credit parameters. It never got too liberal with credit bans during the pandemic boom. In other words, the rapid origination growth is not coming at the expense of credit quality. Let me repeat, the rapid origination, I'll repeat if I can get the words out, origination growth is not coming at the expense of credit quality. It continues to be able to pass on higher rates to customers. This works wonders in maintaining low valuations as well. Its average interest rate is rising faster than benchmark yields, demonstrating its pricing power. Its life-to-loan loss rate continues to be far below its risk tolerance. It's 4.5 versus a 7 to 8% loss rate tolerance. So they have a huge buffer in their models versus what's actually happening to the good side. So it's all FUD, guys. It's all FUD. The Chia Pet, Chia Varini with Wedbush. It's pure FUD, lies, and bullshit, guys. It just is. This guy cannot defend these positions. It's ludicrous to cut from $8 to $2.50 after that earnings report on this basis. These arguments are so thin. They're so weak. The guy is such a lame turd. Who are you going to believe? Noto, Lapointe, Dolev, Fiorio, this gentleman, or a guy who can't even get his numbers right, who doesn't even understand what he's talking about. He doesn't understand SoFi. He doesn't understand their business model. He doesn't understand their ratios. He's a regional bank analyst. I remember when he went on CNBC and he had made that original cut, and the shorts rejoiced, and the stock crashed. They're like, wait, David Cheever is. We didn't know he covered SoFi. Like, they were all confused. Like, nobody knew the guy covered SoFi because he's such a big turd. Fair value accounting. Oh, this is critical too. SoFi's guide continues to assume negative 2.5% GDP growth. That's likely too pessimistic, and a better result would feed its growth. So SoFi's models for risk for its loans, for GDP growth, for macro, they are all so conservative. It's like they take their models, they're born in a three-piece suit with a cup of coffee and a briefcase on their way out the door to go to work. That's how conservative these guys are. It's like they're in like a young, it's just that's how this company is run. It's tight. It's right. They only lend to the best of the best, and they're not growing at all costs. They're growing smart. They're growing because they're good. They're growing because management's executing. They're growing because they treat their customers right, and customers want to stay with them. Customers don't just come in for the bonus and then do direct deposit if they're gonna switch out. I mean, half the customers are signing up for direct deposit. Those customers plan to sit and stay a while. Put your feet up, stay a while, make yourself at home, because you're gonna be here making SoFi money for many, many years, likely decades, folks. Hold on to them hats and glasses. That's not the case with the at-cost accounting other banks. Under the method, banks set current expected credit losses up front and adjust occasionally over time based on performance. Noted pointed out that the cost accounting frees companies to report healthy equity balances one day and be taken into receivership the next, as they hadn't recorded losses on financial statements to accurately portray capital ratios. Oh, we've never seen that happen. A couple times very recently. He corrected the Wedbush analyst who downgraded SoFi partially due to concerns of loan valuations falling because of changing loan classifications from held for sale to held for investment. That change has zero impact on valuation methodology. So again, I say to the Chia Pet, you can have your own opinion, but you can't make up your own bullshit facts. You're an intellectually lazy turd who downgraded SoFi twice in service of short sellers and crashed the stock. I believe intentionally. I can't prove it. I can't prove any illegal coordination, but I certainly wish the SEC and FBI would investigate these people and what they do and how much money they made off poor retail investors who thought the sky was falling. I personally just waited for it to drop all the way down, then I bought hand over fist, and I'm green now in my SoFi position, believe it or not. It's crazy, but I am. Finally, Noto spoke on fair value adjustment assumptions from last quarter. SoFi was criticized for raising the fair value of its loans amid soaring rates and rising risks. Two things. First, this is related to strategy. To hedge away all interest rate risk, it locks in a cash flow to remove downside and forgoes some potential upside. Guys, this is like a hedge. I don't really understand all this. I'm reading it too fast. I could go back and really map it out, but this is like a hedge they're doing so they're not affected, it sounds like, by the interest rate risk. That's why the balance sheet loan balance impact has been so small, and again, credit quality is why losses have been so tiny. Secondly, told investors that its 2.97% loss rate for Q1 was assumed to rise above 4.5 based on economic outlook. That likely pessimistic forecast was part of the fair value adjustment, which again are set by a third-party firm, not SoFi directly. No on-sale loans last quarter. Again, this was the big thing. This is because of ROE optimization. Recently, he's been able to generate 6% net yield from holding versus 4% for selling. So that's 2% more, guys. That may not sound huge, but that's huge. Like that's huge. You'd be a fool to turn down those 2% for no reason, just to keep some dipshit analyst happy who doesn't understand what the hell he's talking about. I'd rather him make the money for the company and get us to profitability, and that's what he's doing. That's what these guys are doing. They're executing. Their strategy is working. They have all the bases covered. They're covering all the angles. And it's not like they're afraid to play any. They're playing all the angles. This isn't Kanish we're talking about here. You know, I'm not going to be driving the ice cream truck when I lose all my money in a Russian card game, guys. I'm just not going to do it. It did the same thing 5 years ago when rates were rising amid the 2028 the 2018 taper tantrum, when conditions improved and selling yields became more attractive. It resumed loan sales once more. Noto is fully confident in capital markets demand being there to sell all loans at favorable gain on sale margins. Boom. End of story. It's like he can't just come on here and lie about this stuff, guys. It's going to be exposed, and the stock would crash to zero if Noto's lying about all this stuff. He's not. He's clearly not. He knows his numbers. He's extremely credible. He always under promises and over delivers. Holy moly, guys. I have been rambling on for 23 minutes. Well, for those of you that are still conscious and not at a blood alcohol level that is putting you into a coma, welcome, hello, and welcome back, welcome and hello. For those of you just joining us from the end of the, no, guys, I'm sorry. I didn't realize I've been going on that long. I want to thank you guys for watching again, but I'm going to keep going, try to get through this, maybe break it into a few parts, put it on pause, go out to the concession stand, get yourself some popcorn, maybe some juju beans. I know your bladder's about to explode, so go ahead and use the restroom. Go ahead and put it on pause. I'll make a nice face for you guys. Hold on. Okay, you got it. Pause it. Yeah, yeah. Okay. Okay. That's my pause face, guys. On the tech platform Galileo and Technesis, the total contract value from the current robust pipeline is multiples higher than at any point during Noto's tenure. The pipeline consists of far larger customers than what the tech segment had been pursuing and servicing in the past. The revenue ramp for these wins will not be immediate. This is what I talked about before, but it will start with moving new customers to the updated tech stack and then eventually migrating the client's pre-existing user bases to the platform. So they have to update the entire stack, they have to build the backbone, and then the hard part is that migration, I think. that's where companies really falter. Hello, Frontier Verizon, if you remember that one. I mean, it's just every time you have one of these major tech migrations and a bunch of data is coming over to the other. I just did like Ameritrade to Schwab, I think, and that was actually pretty impressive. That they did really really well, but I think they have their technology in order, so that's probably why. Hey guys, the firm is confident in growth here accelerating towards 20% by the end of the year. Hey now. Real time asset and liability management in light of the Silicon Valley Bank issues has been a compelling selling point. Absolutely. Real time asset and liability management. That's what we're talking about. Its ability to track deposits in real time and by customer segment is a small but tangible edge. Non financial services. Noto told us to expect travel to simplify the first non financial service offering. I don't think this is going to be a big thing right away. He teased auto and entertainment ticketing products. He expects this vector, financial services, and the tech platform to lead to more growth coming from non-lending segments over time. Yeah, guys, they're not going to be like huge in the travel business, insurance, tickets, entertainment, auto leasing, all that stuff right away, but those could grow into significant sources of revenue over time. And SoFi is trying to be all things to all people, and they're trying to be your home whenever you go in to do anything with money, invest, buy something, get a loan, get any type of insurance or investment product. I mean, there's probably dozens of things they can sell in there that I haven't even thought of yet. SoFi in 5 years, Noto thinks the pace of quarterly member ads currently around 400,000 could at least double by 2024. He wants SoFi to have over 20 million members 5 years from now and 40 million total products. His goal is for SoFi to be a top 10 financial institution in the USA with plans to expand globally from there, first in Latin America. And it's in Hong Kong currently, but not with the full product suite or anything close to it. Yeah, they have sort of a skeleton product in Hong Kong, I guess. That was talked about when the SPAC was out and different things, but it never. I don't think it contributes any significant revenues or does anything really significant. It gives them some kind of international presence, but it's kind of a BS international presence. So, guys, that's the end of the stock market nerds take on Anthony Noto's SoFi interview. Guys, let's finish you out with a look at the price action, what's going on there. The stock, as you can see, is hugging the 50-day and 200-day moving averages. It is still currently just above the 50-day and 200-day moving averages. Obviously, this was my trend line that I drew in here in green starting on the 12th of May and tested that line about 2 or 3 times till the 25th of May. And then that's when we started getting the good news. That's when we started getting the news that the debt ceiling was going to forego any further student loan pauses. And that's where the buying pressure just has gone insane. And the stock has run up 30% in a couple of days here. And after that, guys, I think a lot of people were expecting a massive pullback or that shorts had covered to put that buying pressure in. Again, that's not what happened. We had new money coming into the stock, and I think a lot of the same money, people having to buy in higher than they panic sold a little bit earlier on that Chia Pet short attack. Guys, what's going to happen next week? Well, my firm belief is that the stock is going to go up and challenge $8. Um, it's like, to me, it's just tale as old as time, song as old as rhyme. This thing's been trading in this $5, it's been trading in this channel between $8 and $4.50 roughly for 14 months now. And I think the game is over, guys. I mean, I haven't seen a pattern this bullish. It's kind of similar to this pattern, but normally what we'd see is the stock would run up and then it would challenge $8 and then it will start to pull back. Guys, the reason I think that's not going to happen is because sort of the bear and short thesis is very, very thin and suspect, and the bullish case has gained a ton more credibility, and there's just a ton more evidence and data in support of the bull case. I mean, people are talking about growing like 27% this year. I think SoFi is going to do more like 2.1 billion. I think SoFi's growth is going to be in the 30s. I think they're going to surprise people. I think we could see a net profit in Q3 quite easily. They just have to dial back some of the stock-based compensation and expenses, just a few accounting games, and they can do it. I feel like Noto has the shorts trapped, and he can dial in a profit whenever he wants. The guy's in complete command of the numbers, complete command of the earnings. He can make those numbers land absolutely wherever they want and predict them with great accuracy due to their modeling, due to their accuracy, due to their technology. I mean, guys, I'm not only excited about the tech stack. I'm excited about the company in general. I'm excited about the quality of the customers. I'm excited about the enthusiasm of us investors. I'm an investor and a customer. And guys, my SoFi account's green today by about a cent in my SoFi account. My average, I think, was 701. My average across all my accounts is somewhere around $6.90. So this is the first time I've seen that account go green, and it took a lot of it took a lot of fortitude, I will say, for those of us that saw the stock absolutely crashing and saw our portfolios crashing and went ahead, instead of panic selling like a lot of the crowd did, went ahead and bought heavily down there in the mid fours. So if you did that and you stood your ground and you stuck to your thesis in light of no new evidence, and you understood right away that that was a short attack that was pre-planned before earnings, you know how to invest and you know how to handle situations. If you get too emotional and you panic for no reason, I would put your money into like an index fund or an ETF and not try to trade in and out of individual stocks. Guys, this is one you want to buy when they create these artificial lows, but it's going to be more and more difficult because I think it's, the cat's out of the bag, the mustard's off the hot dog. Like, they're gonna make a net profit, whether it's Q3 or Q4. I'm not sure, but the math is telling me it's definitely going to be by Q4. Look at the trends, look at the growth. Customer acquisition costs, as this wheel strategy goes into effect, will come down, margins will go up, and they will hit their targets. That's my belief. So next week, guys, I believe we challenge $8. I believe this jobs report is good for SoFi. I think the Supreme Court decision could come, and either, if the Supreme Court decision says forgiveness, like the Bears and the Turds are going to try to use that as a reason to renew the short and stuff. But honestly, guys, I don't think the shorts want to go much deeper on this one. I think they've made a lot of money over time, and they've been able to hold the stock in this channel for well over a year, but I don't think the arguments against SoFi are bearing out. I don't think the company's going anywhere. I don't think they need to do a money raise. They're definitely not going bankrupt. All that stuff is just a total bunch of crap. So I think the bulls will win the day. I don't think 8 is by any means an upper limit. Remember, we ran over 24 bucks 3 times. Now, yeah, that was very high at the time and a little bit ridiculous, a lot bit ridiculous if I'm honest. But these types of things were happening back then. They're not happening now. But a lot of people are saying 15 by end of the year. I think that's possible, say by, Q1 2024, when the Q4 earnings report comes out. If you have a really solid beat and a really, really solid net profit and all the numbers are rocking and rolling and the growth is fast, I think $15 is not unreasonable. I'm keeping my target for end of the year at $9.75, which a lot of people say is far too conservative. But again, I am like Noto. We both have this amazing, great hair, and no, not at all. I'm not really like Noto. The guy's accomplished a million times more than I have, but my investment philosophy and my philosophy on numbers and projections is like Noto, that I like to be extremely conservative, and why I do agree that the stock with a net profit should be trading something closer to $15. My actual suspicion is that it will be closer to $9.75. So that is a price target I'm sticking with. Guys, I have gone on literally forever. I know many of you have expired, actually passed away during this broadcast, and I am sorry about that, guys. I didn't know I was going to be going on this long. If you were on life support or extreme heart medication, you should not have watched the broadcast. I don't know why that disclaimer was not at the beginning of the show. But guys, my name is DannyDealz. It's Friday night. It's June 2nd, 2023. The SoFi stock had a great week. I expect more strength as some of these idiotic shorts actually come to their senses and cover next week. For Hurricane Lopez and Stock Karen, we'd like to thank you for watching the program tonight. don't think we're going to bring you anything over the weekend. We'll see. If any huge news or something like that comes out, you never know. But other than that, guys, we will see you Monday morning on the live stream. Thank you for watching. Great day for SoFi investors. Hopefully, you guys are having a good night and a safe and happy weekend. And we will talk at you again real soon.